This is Terry Smith for ForexTradingSchools.com, and this is the next video in the Forex for Beginners series. So far we've started to look at the basic elements of Forex trading. What is Forex? What the charts represent, what candles are. Now let's start to have a look at the charts themselves. As I've said before, a chart represents the exchange rate between one currency and another. Now this one we're looking at British pounds, hang on, right, Canadian, US CAD. So in this one we're looking at US dollars versus the Canadian dollars, US CAD. And currently the exchange rate is 1 US dollar equals $1.08 Canadian. Now, something important to understand is the time frames that you want to be looking at. Various people look at different time frames. As I said before, one candle represents or displays the total amount of movement within that time frame. So each one of these candles in the 15-minute chart represents the total amount of movement in the exchange rate within that 15-minute period. Now if I just highlight that, you'll see down the bottom it says that 15-minute period started at 15th of August 2014 at 15:45. That's London time, the way my MT4 is set up. Okay, so it's 3:45 PM London time. Now if you're looking at the 15-minute chart, you'll be looking at what's happening right now, what's been happening just in the last few hours of that day. Primarily you want to see what's going to be happening in the next couple of hours, 2 to 3 hours, and place your orders accordingly. However, if you go out to a larger time frame, such as 1 hour, 4 hours, 8 hours, you get a completely different perspective. If I change it to the 1 hour, then we'll see that now these are 1 days. These coloured areas represent 1 day. So that's last Friday, Thursday, Wednesday, Tuesday, Monday. And I'll just highlight, I'll just mark off last Monday. Okay, so you know that's the start of the week, and this is Monday as well. So I just mark that. There we go. So that's Monday to Friday. That gives you a very good idea of what the overall trend is. So when you're looking at placing your orders, you need to decide whether you think it's going to go up or go down. A very good indicator is the current trend. So the current trend, if you look at the 1 hour, is downwards, very strongly downwards. So the overall movement is very likely to be down. So you have a far higher probability of it going down than going up. However, within 1 day you get a lot of this movement. Now, for example, so on Friday it moved from there to there. Right, so it definitely moved down. However, within that day we had these massive movements down and back up and back down again. So we actually had down, up, down, up, down. That actually gave you 4 opportunities to make money in 1 day. So now at the moment So it looks like it's basically repeating the start of last Friday. See how it's going down, 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 entering the purple zone. Now the significance of these colors will be described in another video. It's a more advanced topic, but now bear in mind that I'm recording this from Sydney, Australia. So to me this is now 2:15 p.m. Monday afternoon. So this is the beginning of the end of the Asian session. So this is the morning of the Asian session, midday of the Asian session, afternoon of the Asian session. Now it's the afternoon of the Asian session where the action really happens. So, and you can see back here it's the same thing. So during the morning of the Asian session, just quietly moving down, 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 and then you have the afternoon of the Asian session, the start of the London session, lots of action happening. Then we had some news releases, then the start of the New York session and more news releases, and away it went. Then after it was all over, it basically went back to the direction it was going anyway. And you could pretty well draw a line straight down there from the start of the week to the end of the week and basically you could put an order anywhere along that line, put a sell order, and you would make money without even thinking about it too much. However, you want to maximize your income, so within each day you need to be looking at the intraday movement. So now today, right, so I'm assuming that there's going to be a continuation of the downward trend from last week. However, during the afternoon and into the evening, I'm expecting a bit of bouncing around here, and it's those bounces that I'll be looking at making money from. So at the moment it's come down like it did last Friday. I will be expecting it to come back up again when it does. Now today there's no big news releases. There's a few news releases but not a lot of significance, and certainly nothing affecting the Canadian dollar. If it does come up, then I'll be putting a sell order in there. Now if we want to get even a better long-term idea of how it's moving, we can go out to the 4-hour. So on the 4-hour chart you can see way back, so this goes back to early June, and we can see if we scroll back how it's sort of been going up and down around the current price, and then it fell beginning of June, it fell way down, and now it's come back up again, shot up, and it's back down again. So it seems to oscillate, has been oscillating around that price. So I'm going to put a line through there, around about there, to mark an area of what we call support and resistance. So it tends to bounce around that line. And also down here, it's an area of support and resistance, so it tends to bounce off that area, and then when it gets up to here, that'll do for now. So the significance of that is that, okay, it had a big push up, the bulls ran out of energy, the bears took over. You can see we're now in a multi-week downward trend. I'm expecting it to continue down, but it might possibly bounce off that area down here. So that's the sort of thing that you need to look at. Sometimes you might even want to look at the daily chart. So we go back to the daily chart to get even a longer term idea of the trend for that currency pair. So in this case doesn't tell you a lot other than it has in the past been very volatile. It has been a lot lower. It's moved right up. The bulls ran out of energy, came back down, Then the bears ran out of energy, came back up, the bulls ran out of energy, and it's come back down again. So yeah, I'm going short, that is I'm going to be putting a sell order in there, but I'm not expecting it to go terribly further down. So I might get, hang on, I'll put it back to the 4 hour, 1 hour, where's that line? Yeah, so we might get from its current price, okay, it's 430, 440 pips. So we might get 400 pips out of it. And as I explained in one of the other videos, the significance of the pip, okay, 1 pip is 1 base unit of the exchange rate. So for example, if the exchange rate moves from 1.09000 to 1.09125, it has moved up by 125 pips. The significance of that is that if I put in a 100,000 US dollar order at that price and then close it at that price, I will make $125 roughly. And that's basically the same for all currency pairs. It's sort of around about that's ballpark figure. So a fall of 400 odd pips to there will mean that in a single order I'll make over $400, around $400, which is not too bad. However, if you look at the size of the movements, normally on an average day it only moves around 340 pips. So there, from the very top to the very bottom of the day, 280. From the very top to the very bottom of the day, 300. So around about 300 pips. Today is a very today being Monday is a very quiet day. Normally nothing much happens on Mondays. Last Monday you can see there was a big fall of 560 pips. That was in response to the previous Friday's big push up. Very often you can see back here you get a big push up, the following day it falls back down. So last Friday we had a big push up on some negative US dollar news, and then it fell back down again. And the trend has been continuing down since then. So last Friday we had a push down followed by a big push up. So today I would be expecting another push down. However, as I said, we may very well get a stop run, which is a fake push by the banks. They'll push it up, people buy in, start buying, expecting the price to go up, which pushes it up a bit further, and then the banks put in their sell, they start selling and selling big, the price crashes. The people who had buy orders, they lose, the banks win, and that's the way it works. So I'll be waiting for it to go up, and then I'll be putting a sell order in. Okay, so that's about it for this video. More next time. Okay, catch you later.